Here's something almost nobody explains to you: your bank can freeze your account, completely lock you out of your own money, and not because you did anything wrong. It can happen because of one specific, very common mistake. And in 2026, more states than ever have given banks the legal power to do exactly that. I'm going to tell you the one thing you should never do with your money, the real law behind it, and the one free step that keeps your account from ever getting stuck. This isn't fear-mongering. This is exactly what your bank's compliance department knows and rarely tells customers directly. Stay with me, because the second half of this video covers something even more people get wrong, and it's the one that can trigger a federal investigation. Let's get straight to it. The single fastest way to freeze your own bank account is called structuring, breaking up your cash deposits or withdrawals into smaller amounts to stay under $10,000. Maybe you've heard that banks have to report deposits over $10,000 to the federal government. That part's true. It's called a Currency Transaction Report, required under the Bank Secrecy Act. But here's what almost nobody tells retirees: if you deposit $9,500 one day and $6,000 a few days later to avoid the paperwork, that is not a workaround. That's a federal crime, even if every dollar is completely legal money, your own retirement savings, an inheritance, proceeds from selling a car. It doesn't matter where the money came from. What matters is the pattern. Banks are trained to flag exactly this behavior, and when they do, they don't just report it. They can freeze the account on the spot while a suspicious activity report goes out. People have lost access to their entire operating funds this way, sometimes for weeks. The safest move, always, is the boring one: deposit the full amount at once, and if a teller asks where it came from, just tell them. Honest answers to a compliance question take 30 seconds. A structuring investigation can take months. But that's only half the freeze story, because in 2026, there's a second, newer way accounts get locked, and this one isn't about anything you did wrong. It's about something you probably haven't set up yet. Let's call her Carol. 68 years old, widowed, careful with money her whole life. Her nephew calls, says he's in trouble, needs $4,000 wired today. Carol's rattled. She goes to her bank and asks for an urgent wire. And the teller says, "I'm sorry, Mrs. Carroll, I have to put a hold on this." Carol is furious. It's her money. But under the new laws that kicked in this year in more than half the states, banks are now legally protected, even encouraged, to pause a transaction like this if it looks like possible financial exploitation. No lawsuit risk for the bank. No penalty for asking questions first. In Carol's case, the delay probably saved her $4,000, because it turned out her nephew never called. A scammer had spoofed his voice. But imagine the transfer had been real, urgent, and legitimate. Without anything on file to quickly verify her, Carol could have been stuck for days while the bank investigated. That's the trade-off behind these new rules. They're built to protect you, but they can just as easily freeze money you legitimately need, if the bank has no fast way to confirm the transaction is really you, doing something you actually intend. If protecting your money and avoiding these traps matters to you, hit subscribe. I break down exactly how these rules actually work for people over 60, without the scare tactics. So here's the fix Carol didn't have. It's called a trusted contact. It's a free, optional name you give your bank or brokerage, someone they're allowed to call, not to access your money, just to verify you're okay if they suspect fraud. FINRA rules already require brokerage firms to ask for one, and regulators are pushing banks to do the same. If Carol had listed her daughter as a trusted contact, the bank could have called her daughter, confirmed the story didn't add up, and either released a legitimate transfer in minutes or stopped a scam cold, instead of a multi-day freeze either way. Call your bank this week and ask specifically, "Can I add a trusted contact to my account?" It takes about 5 minutes. But the next one is where people lose real money, not just time. Watch out for calls, texts, or emails claiming to be from your bank's fraud department, warning that your account has already been frozen and asking you to verify your login, PIN, or a one-time code to unlock it. Real banks never ask for your password or a text verification code over the phone, ever. If you get a call like this, hang up and call the number on the back of your card yourself. Scammers specifically imitate the elder fraud freeze process I just described, because they know it's now real and it scares people into acting fast. Next, dormancy. If an account, especially an old savings account or a forgotten CD, sits completely untouched for several years, most states eventually sweep that money to the state's unclaimed property office. It's not gone, and it's not a scam, but you have to actively claim it back, and that can take weeks of paperwork. The rule of thumb: log into every account you own at least once a year, even small ones, so nothing goes dormant on you. Then there's the joint account mistake. Adding an adult child to your bank account so they can help out feels sensible, but done the wrong way, it can create real problems. That person now legally owns half the money, it can complicate your will, and if they have debt or a lawsuit, creditors can sometimes reach into that joint account. If you want someone to help manage your finances, a power of attorney is usually the safer legal tool, because it gives them authority to act for you without making them a co-owner of your money. Last one, unusual wire transfers. Sending an unusually large amount somewhere new, especially overseas or to someone you've never sent money to before, is exactly the pattern banks are trained to flag under these new laws. It doesn't mean you did anything wrong. It just means, if you know a big, unusual transfer is coming, call your bank ahead of time and tell them what it's for. A heads-up call almost always moves faster than an automatic hold. Let's bring it together. 1. Never structure your deposits or withdrawals to dodge the $10,000 reporting rule. It's a felony, not a shortcut, even with clean money. 2. As of 2026, most states let banks freeze suspicious transactions to protect people over 60 or 65 from exploitation, which is why Step 3 matters most. 3. Call your bank this week and set up a trusted contact. It's free, it takes 5 minutes, and it's the single fastest way to unfreeze a legitimate transaction if one ever gets flagged. And always remember, your real bank will never ask for your password or a text code over the phone. This isn't legal or financial advice, and every state's rules are a little different, so when in doubt, ask your own bank directly. If this helped you feel a little more in control of your money, subscribe, and share it with someone over 60 who handles their own finances. It might save them a very stressful phone call.